Hi everybody and welcome to the London Session Update with myself, Kathleen Brooks, on Thursday the 11th of April 2013. Well, today we just had initial jobless claims out of the US and they were much better. So yet again, another piece of the jigsaw of the US unemployment picture, and it's not really making a clearer picture at all. We had these very weak payrolls and we've had some very weak initial jobless claims recently, but a 42,000 drop in the number of claims last week. That's certainly moving in the right direction, and people will be looking to build on that success. So to see continuing improvement in the labour market after a few weeks of it just getting a little bit wobbly, but that's not had too much of an impact on the markets, but it's certainly giving dollar yen another boost, and it seems like there's the will and the way to get us to 100, even though it is being a bit slow. We got to 99.88 today, so maybe people are just waiting for the weekend for that big push. But we think it's going to be taken out. We think 105 will be the medium-term target after that. However, Bank of Japan isn't just impacting what the yen is doing, it's having its mark on other asset classes as well. Let's take a look at this here. The S&P 500 yesterday hit a record high, but what's more interesting for the trader, and especially the retail FX trader, is actually Aussie dollar. Aussie dollar is now following the S&P 500. Why is that important? It's because since the start of this year, that relationship, which is traditionally very strong, has actually been broken down. So all of this liquidity in the market has actually helped to rebuild that relationship. So we've got the Aussie dollar moving higher along with S&Ps. Now it's not just the Aussie dollar, the Kiwi dollar, the CAD. Added to that, we've got the South African rand. All of these high yielding currencies are being pushed higher alongside obviously things like stocks that also have a much higher yield than government bond yields in Japan, for instance. So we've seen the Aussie dollar really be able to shrug off some very weak employment data at home, and it looks now like it's on its way to testing 106, potentially getting above there as well, on the back of continual flows into it on and a kind of an Japanese asset or a Bank of Japan trade. So we look for further gains in the Aussie dollar. However, we would say that both the Aussie dollar and the S&P, they are going to be vulnerable now to any changes of sentiment from central bankers, so do watch out for that. But overall, for as long as stocks are going up, we think that the Aussie will follow, and that's a good relationship for traders to keep an eye on to see how long that stays together for. But we do think it has been generated by the Bank of Japan. Now, obviously this whole week has been kind of the Euro yen. This is a weekly chart, so you can't even see it in all its glory, but it goes back an awful long way. So that's why I've showed it to you today. We've got above 130. We're now at our highest level since 2009. The next level that we're targeting is the 2008 highs, but where they are, they're 140. Basically, what I'm saying is that there's not too much resistance between where we are now, over 130 and 140. That's another 10 big figures, huge move higher. Unless we think that there's some sort of retaliation against the Bank of Japan, maybe the German exporters or the ECB don't like to see Euro yen move up so high, then we really think momentum remains to the upside, and Euro yen is going to be one of the key beneficiaries. In fact, there's a lot of talk been spread about the markets right now that investors are coming out of Japanese bond market and actually boosting volatility there, and then helping the sovereign bonds in Europe, so flattening volatility in some of those weaker peripheral countries. That's kind of one of the key drivers. The other thing to point out is that Japanese investors haven't really been ditching their own government bonds yet. If they do start to do that, that could mean more upward pressure on the euro. So a lot of Bank of Japan related issues to digest as we head towards the end of the week. But we'll have to see where those weekly closes lie tomorrow. And please do join us then for more. Thank you.